Hey, what's up, people? So we're going to be looking at some of the best performing investments in Kenya in 2021, and this is gonna be a dope video. So guys, I hope you're ready for this wonderful video. It's gonna show you, where do you want to invest your money. So let me make a distinction on this. I have done a video previously on the best investment opportunities. That's basically more like which sectors should you be looking at, what kind of businesses should you be looking to open, what kind of side hustle should you be looking at. But now I'm going to be looking at the best investments whereby you have income already. You just need to store your money aside, let it work for you, let it make you some money, let it bring you in more chapa, more dollars, guys. So I won't be looking at business opportunities aside. These ones are more like assets, are more like those things that you don't have to worry about. They can even be passive income sometimes if you want to. You're just purchasing something like, shares, those who know shares, stocks and stuff. Anyway, we'll go into all that. But basically, this video is about the best investment opportunities and the best performing ones right now. Because after 2020 with the corona mess, the economy is rebounding, economy is opening up, tourism sector is booming, agricultural sector is back up. Things are coming back up slowly. You've seen the new investment opportunities coming up from the UK, recently from Korea, from Japan. There are so many investment opportunities, what we call the foreign direct investment into the country, meaning that money will start flowing into the country. So that means more opportunities for people to start making money. So how are you going to make money? Where are you going to invest your money? That's what we're going to be looking at in this video. Basically, how do you enjoy the rebounding of the economy? There are some people who are working already, they have consistent, stable income, and they just want to make sure that their money is working for them and not saved up in a bank somewhere. Like I always say, if you're saving money in the bank, you are losing that money. You're losing the value to inflation, they are charging you some fees, and it's not as safe as you think. It's just a mentality and a wrong kind of upbringing whereby we think we have to save money in the bank. You're just saving money in the bank because that's what you have been taught. So you have to rewire your brain. You have to think differently from your parents, Guys, you just have to think differently. We are going on a financial freedom journey. That means you have to think differently. You have to think differently from your parents, however sad it may seem. You have to think differently from the society, from your uncles who know about stocks and what to buy and what's the next big thing. That's just a lot of BS. Right now, we want to do solid stuff, tested stuff, and things that we know for sure will help us in building wealth over time. Here at Case Money Matters, as usual, we're talking about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a consistent income, basically financial freedom. So, which are some of the best investment opportunities in Kenya and the ones that perform best? And you don't have to do so much work with them. You basically just have to buy them and let them be, right? Of course, number one on the list for me personally, is equities, which some people would say shares, or stocks, or what you want to call it. So this is what some people refer to as stocks or shares, right? In this case, you're simply buying shares or stocks or buying part of a company. And this can nowadays be done in a million different ways. And you will always find opportunities in which you can buy these shares and stocks. Now, I like equities because they would give you money while you're sitting down. It can be a passive income for you. If you invest well, you could be earning money every single month, even though you may not withdraw it. But this is money that's consistently coming in, consistently working for you. Whether you want to invest in equities in Kenya, whether you want to invest across Africa, whether you want to invest in the US, whether you want to invest in Europe, equities is a good investment because of different reasons. Number one, appreciation of whatever it is you buy. So if you buy some assets, if you buy some company like Amazon, Coca-Cola, Safaricom, Bamburi, is always appreciating. We're hoping that the company is going to appreciate, and therefore your investment will also have what we call capital gains. The share value keep appreciating, meaning that your take in the company or your value in the company also appreciates with it. And of course, there are other benefits if you want to be trading it. There are those who trade it on short-term basis. There are those who get dividends, right? So if they pay dividends, then it means you're getting some income. That can be passive income. So equities is one way of making money. Investing as part of a company is one easy way of making money. You don't partake in decision making directly, at least. You don't do so many things. You let the managers and the people who understand the company and the business do it for you. All you do is buy part of the company, let them do the heavy work, the heavy lifting, and you get your money back. Simple, easy peasy, Japanesey. For me, that's one of the best. Like, that's why I'm heavily invested. And that's where I look at when I want to go look for aggressive growth or, long-term growth or just normal, simple investment. So, of course, you can choose. You can go for large cap, medium cap, small cap. So it depends on what you want. But in a place like Kenya, the companies are still not as sectioned. So it means you're just going to be doing analysis on some of the best stocks to buy. So you could be doing analysis on Safaricom, Bamburi, KPA, all those good companies, belong to part of a company. You use these products every day, but you don't want to belong to them in terms of investing. So you're buying these expensive cars, you're drinking Coca-Cola every day, you're using Safaricom every day, you use these things daily, using fuel daily, but you do not want to be part of them in terms of investing. This is how you claim part of these companies. This is how you claim ownership. This is how you belong to it fully. Please, I always tell people, you've been using this thing for the last 30 years or so, or 40 or 50, depending on what your age is, and you never thought that you should own part of this company that you use every day. I use Facebook every day, right? I use Instagram every day. So I definitely want to belong to that group. I want to know that I own a simple, tiny, small part of Instagram or Facebook or whatever it is I'm using, right? Number 2 is what I call fixed income investments. So in this case, we have things like bonds. So here, basically, these are just debt securities, whereby you are paid some money over a period of time by some fixed amount of money. So for example, you lend the government your money, they will be paying you, let's say 14% on your money for 20 years, right? So every 6 months, the government is depositing you money every 6 months. So these are just basically debt securities that provide a predetermined amount of income over a period of time. And it's a fixed amount of income. I think this is one of the best investments for those who are risk averse. They fear, things like equities and shares because of the fluctuations in the market and the volatility. So you want something safe, but you can still make money out of it. Now, let me tell you, in a developing country like Kenya, this is one of the best investments because we still have very high rates, very high interest rates on these bonds. So however much they may not be as highly rated, but we know that the government has never defaulted on bonds and any kind of domestic debt. This is one of those investments that someone who is risk averse should be getting into. And like I said, there are many different ways in which you can get involved. So under fixed income, we have treasury bills, which I speak about all the time. If you check my channel, you'll find lots of videos on treasury bills and treasury bonds. So treasury bills are just short-term debt securities, basically. Some people refer to them as short-term promissory notes, whereby you lend your money to the government for a period of time. It's usually between 3 months and 1 year. 91 days, 182 days, and 365 days, right? So you give your money, you fix it up with the government in terms of a promissory note, and they give you a determined interest rate for that period. So that's very simple. Treasury bills, I talk about all the time. Check my video on treasury bills. Then we have treasury bonds. Of course, that's the long-term debt securities, I would say. 5 years and above, most of them, 5 years, 10 years, 15 years, 20 years. Fixed income, always. The government will always pay you. They pay you in intervals of 6 months, 6 months, 6 months. So you give them your principal amount, do the auction. I have done all that process on my channel. You know how to buy bonds. You do the auction, you get accepted, you do the payment, and then the government will be paying you every 6 months. You get your money, and then you can use that money to invest in other places, which I'll also mention later, right? So the principal amount, let's say you have 5 million, is constantly giving you money, and at the end of the tenure, you still get your 5 million back, while it has been making you money every single year, right? Amazing investment, amazing investment. I love it, honestly. Then we have commercial papers, which are just short-term promissory notes issued by private entities in terms of when they want to raise any money. So that's how they ask for money from other people, from the public. We call them commercial papers. It's just basically telling someone, I'm giving you this paper to show you that I owe you this amount of money, and you're giving me this money to use for 1, 2, 3 things. Again, very determined. Then we have corporate bonds. I talk about that all the time. The other day I did a video on family corporate bonds. So these are basically bonds offered by companies as approved by the Capital Markets Authority. Sometimes they have really good interest rates. Like the one that was offered recently by Family Bank was at 13%. That's a really good rate, right? For 5 years. So again, they can be long-term, medium-term, depending on what the company actually wants and what is approved by the Capital Markets Authority. Corporate bonds are basically offered by companies. Then of course we have the bank deposits. So if you can negotiate and you have good amount of money and you want safety, or you are planning to buy something soon, so you want your money to be liquid and be in a bank, yes, you can go to the bank and have a bank deposit. Or some people also just invest that way. They negotiate with the bank. They have a good interest rate with the bank, 7%, 8%. Before Corona it was up to 9, 10%. You negotiate with the bank and then you fix your money there. And after a period of time, they pay you with some interest. Again, that's fixed income. So you're sure that you will get money in 3 months and you're sure how much it will be on a particular date. Very direct, very simple, very straightforward. So those are some of the investments under fixed income securities or debt securities. Now let me go to the other one. So I've spoken about equities, I've spoken about fixed income, and now I'm going to the third one, which is basically mutual funds or unit trusts. Now these two things, most of the time they're used interchangeably, but in real sense they're quite different. Unit trusts are under a trust. That's why you hear families come together, then they form a trust. And in that case, the people, the investors in that trust, have the ownership or are the beneficiaries of that particular trust. Mutual funds, on the other hand, are just a collection of different people bringing their money together with a management, a proper professional management to help them invest in different options like bonds, equities, real estate and stuff like that. So they are quite closely linked in that they're all different people pulling in money together. But usually with a unit trust, it's because it belongs to a trust fund. It's more like a trust fund, I hope you get the gist. There's a slight difference between them, but they both invest in almost the same things. They're both run in almost the same way. So usually you'll hear people say mutual funds or unit trusts, but there's a bit of difference there. So when these people pull money together, both in mutual fund or unit trust, basically the professional manager who is managing the fund will definitely choose where to invest the money, and then we're hoping that they get really good returns that can then go back to the investors. So of course they will invest in different things. They can invest in equities, in bonds, in securities, even money market funds are part of these unit trusts or mutual funds. So under unit trusts, we have money market funds, we have balanced fund, we have bond funds, we have target date funds, we have equity funds. We have different kinds of investments targeting different things. And that's something that you have to understand. You must make sure that you know what are you investing in, what kind of product are you investing in under that particular mutual fund. So there's a company or a unit trust, and then under it there are different investment options, and they could also be just focused on a particular one. So you have to know what you're investing in. You have to know what your mutual fund or what your unit trust is investing in. Then we have the SACCOs. I spoke about best performing SACCOs. I've spoken about top SACCOs in Kenya, how to join them, so you can check out that video. But SACCOs is another investment option that people can always go to in Kenya. SACCOs are really good, honestly, because they are quite safe. The only problem is that most people look at SACCO from the loan mentality mindset. So if you look at SACCOs as an investment, then they are really good, because then you deposit your money and that money is always compounded, and they also have very good interest rates. If you check my video on the best performing SACCOs, you will realize that most SACCOs have over 10%, which is amazing. Plus, they give you dividends. Nice, right? So SACCOs, that's another investment opportunity in Kenya. If you want to start investing and enjoying the compounding of your wealth, you can also use a SACCO. Don't just think of it in terms of loans. Think of it in terms of investments. Some SACCOs have been there since 1972. So you can imagine if you started investing like 20 years back and just putting in 10,000 or 5,000 shillings, you definitely multimillionaire by now, right? So these are really good investment opportunities in Kenya and in developing countries generally, because SACCOs are basically controlled by the bulk of the bottom economy. So SACCOs are really good investment options for me. Then of course we have real estate. I've spoken about that in this channel. Real estate is a good place to be. Like I said, you don't have to buy the real physical estate. You can also buy what we call the REITs, which is the real estate investment trusts, which you can definitely get through Nairobi Stock Exchange or different stock exchanges across the world. If you're investing in Kenya, of course you'll get like Ifahari, for example, in Nairobi Stock Exchange. I've also spoken about investing in real estate, how to start, right, in Kenya. So real estate investment, a good place to go into if you have the money to start and you have the time and you have a clear plan and objective. Don't just dip your feet because you're trying to make quick money. It's something that you must understand. You must understand the market. The real estate market right now is very difficult to understand in Kenya. So be sure on what you're doing. Then we have what I call the derivatives market. Derivative, from the name derivative, it is an asset that derives its value from a certain commodity. So it's an asset that does not have like a physical commodity attached to it. So it derives the value from an underlying assets. Derivatives is a very complex investment. You must understand them quite well. I will do a video on derivatives. Please let me know if I should do a video on derivatives and how you can trade them, how you can make money with derivatives while trading through capital gains. So let me know. You can actually trade derivatives in Nairobi Stock Exchange. Let me know if you want that video. I'll post it soon when I get the opportunity to. So derivatives market is good. You can do trading, you can invest in derivatives. It's an amazing market, but it's very complex. It requires someone who understands these trading options. So under derivatives, we have basically different types of contracts. So there we could have something we call future contracts. Basically, you are agreeing to sell or buy something in a future date at a particular price with someone. We have what we call swaps, and we have what we call options. Futures can also be referred to as forward contracts. So those are the main basic types of derivatives. But like I said, only get into derivatives if you do understand what they actually mean and what they do. So don't just get in there if you don't have the information, because you may end up losing money. The other one and the final one, which is extremely important, and that's why I'm leaving it here to say it last, is retirement planning, or retirement fund, or pension fund. Pension planning should be for everyone. Doesn't matter what age you are, you should start planning for pension. There are so many pension funds in Kenya that you can invest into, and you can start putting in money as soon as possible. The earlier you begin, of course, the better, because this is more like, it's almost like a fixed income too, because most of them will always be very stable, and you will always be sure that you will have your money at the right time when you retire, possibly. So pension funds are really good, have very low management fees most of the time, because it's a long-term investment, and they understand it's a long-term investment. And it's a very easy, flexible thing that you can just do as you work and never even think about it. So pension funds, really good if you're thinking about retirement. So these are some of the best investments you can get into. This video has been pretty long. Like, I didn't want it to be that way, but I've tried to rush through it and speak as fast as possible. So if you don't understand something, go back, rewind, and understand it. Otherwise, guys, leave your comments below. Let me know which one of these are you investing in already. And this is how we go. Best performing investments in Kenya, guys. See you next time in the next video. Company, tools are crowded, freeze a party coming, move around.